Welcome to it. Time to have a look at how markets performed. Asian markets drifted throughout the trading day. And when we look at what was happening on the commodity side, we did see that, the investors happened to be monitoring that particular side, but commodity markets happened to steady. And the fear is around the COVID-19 resurgence numbers as cities in China are retesting citizens as well on that particular front. Markets in Japan are closed today, and the Chinese markets at this particular point are closing higher. Again, it's the Delta variant concerns that are still lingering around the markets. Over in Europe, we are seeing markets inching a little bit higher, and this trying to break away from the cautious start that we had yesterday. Of course, yesterday our markets were closed, but the rest of the markets continued trading. On the U.S. side, when you look at U.S. futures, those appearing mixed. Of course, everybody looking forward to the U.S. bipartisan infrastructure vote that is set to take place around the Senate side. So we are going to be monitoring that. But there are also events that are playing out this week as well that we'll be keeping an eye on. U.S. CPI numbers giving possibly some direction as to what we can expect from the Fed. On Friday, we had that blowout U.S. jobs report figure, which we'll unpack a little bit more detail with our market watcher who is scheduled to talk to us this afternoon. But we're going to be looking at that. And we also have the Fed officials from Arkansas talking on Wednesday and Thursday as well, in terms of where we might be going with interest rates. Investors are going to be looking for clues around the tone and some of the indications that may provide. We kick off with bank earnings. Investors are going to be keeping an eye on Nedbank that is publishing their numbers tomorrow. Of course, we're going to be bringing that interview with the Chief Financial Officer for Nedbank. But to talk to us about a lot of the themes that are playing out right now, we are joined by Viv Govender, who's a wealth manager at Rand Swiss. Viv, thank you so much for your time. Let's check in on the JSE. Yesterday, we had a public holiday. How did we open today?
Yes, we were basically having a second. Sorry, yeah. We had a holiday yesterday. The market, of course, it doesn't stop without us. And at the moment, I just cannot see. I just can't see what the market is like at the moment. Wait a second.
Right. So there were all these concerns around, regulatory fears in China affecting the likes of Tencent and Naspers. So call it a week or so ago. How are those shares performing now that, we've started a new week?
Yes, I mean, they've come down quite dramatically from their highs. But at the moment, we're seeing Naspers up dramatically at the moment, almost 9% right now. This is a huge jump off, but it still doesn't get us back to where our month highs are. We're going to be about 2,900. The month high is about 3,000.
Right. So Friday we had the U.S. jobs report number coming out very strong. What does that mean for the Fed in terms of the direction it might give, and also the U.S. CPI numbers that we're expecting this week? I mean, what kind of hints and clues will investors be looking out for?
Yeah, the number was much higher than expected, and that's obviously a bit of a positive, indication. That being said, I don't think it's going to have too much of an impact on what the Fed's going to be doing. From all indications from the U.S. Fed, they would need to have, quite a series of, numbers coming through that are going to be giving a trend. So any individual number is not going to be enough to change their direction. And right now, they are very concerned about, trying to get that economy back on its feet. So I think they're probably going to be, erring on the side of being more dovish for longer, and will require quite a number of, positive surprises before they start raising interest rates.
So South African banks, will be publishing their numbers. We kick off with Nedbank tomorrow. What will you be looking forward to as these banks publish their numbers?
Well, all these banks are giving very, very strong, forecasts of strong indications that they're going to be giving very good numbers. Apparently, the kind of provisions they've given last year for COVID were a bit overdone, and therefore they aren't going to be hit quite as badly, as they had feared. So we've gotten all the banks basically coming out and giving us some really positive, feedback in terms of those numbers that we can be expecting. We already saw a lot of, upswing already in the banking sector at the end of last week. So, multiple days when the biggest banks were up quite a bit. I do, however, I'll put our focus on what's happening with what's going to be their forecast for the coming year or so. It's one thing to recover from a down period like COVID period with a nice good number, but we still need to see economic growth and we need to see activity in the economy return for the banking sector. It looks to be a positive investment.
There's so much market-related events taking place this week. Is there one that comes to mind right now that you'll be keeping an eye on?
Yeah, I'm looking at some of the numbers around the oil price at the moment. I do think that we are being concerned about what's happening with the oil demand. During the worst of the COVID period, we did see oil basically effectively negative prices. But that being said, we have seen a big recovery since then. However, recently with the COVID situation, kind of rebounding in certain places, with the new variants, etc., we've seen a drop-off in demand again. And I would like to see what's happening with inventories, with regards to oil, and whether or not we're going to see another pullback in the oil price, or whether or not it's going to find a bit of a floor at the moment.
All right, Viv, thank you so much for your time. That is Viv Govender from Ren Swiss. Today we have comments from the Fed presidents of Cleveland. Tomorrow, as I mentioned, Atlanta and Kansas City, as well as the U.S. CPI numbers that we are expecting, hopefully giving us some kind of clues as to where the inflation trajectory is going at this particular point. That's it from me.